How's it going, YouTube? Welcome back to another video with the House Money Investing channel. In today's video, I'm going to go over 3 of my highest convicted growth stocks for 2021, as well as 3 strong buy stocks with over a 9% dividend yield, and 7 NASDAQ ETFs to play the index winning momentum. And then I'll come at you guys with a couple bonus stocks just to add on. First stock we have First, we have my 3 highest convicted growth stocks for 2021. It's going to be ticker FF. Before we get into it, if you like this type of content, please hit the like button. Please subscribe, hit the bell, follow my journey. I do post stocks 7 days a week. As I analyze stocks 7 days a week, I have 12 brokerages that I display on this channel. All with 100% transparency. My gains, my losses, my deposits, my withdrawals, all my buys and my sells. And yeah, so let's get into it. First, we have Fiverr, ticker FVRR. This is something I hold long term. I'm up 19.01% in my position. This is a company that just IPO'd back in June of 2019, and it is up over 800% since then. So very good growth. Doesn't pay a dividend, but that's cool because it's got the nice growth. It's got a nice buy rating of 63%, hold rating of 68, 0% sell, and that's from 8 different analysts. They also been doing very well on EPS, and this is basically a company that develops the e-commerce platform that allows people to buy, sell digital services. It has a few segments it operates through, which is US, Europe, Asian Pacific, and basically the rest of the world, including Israel. The firm offers digital marketing, graphics, design, video and animation, writing and translation, music and audio. So definitely a good developed e-commerce platform here, which, as you can tell, because it's been growing massively. Then we got Etsy, ETSY. Also another long-term play of mine. I'm up 9.42% on this play. In the past 5 years, this thing is up over 2,200%. So Etsy has been doing amazing. Last year alone, it ran up from $29 all the way up to $198. 17 analysts got at a 94% buy rating. Great EPS for this company as well. And they're in the management of online marketplace. It's a technology platform that allows sellers to manage and scale their businesses. The firm offers handmade products such as shoes, clothing, bags, and accessories. It operates through the United States and the international geographical segments. So definitely a nice play here into consumer services and retail. Next up, we have ticker ISRG, Intuitive Surgical. This is something that's going to be a new swing trade for me, but I do have it on my watch list. Looking at the steady growth of this play here, it's about a 60% growth per year. Very strong analyst ratings, 68% buy, 21% hold from 19 analysts. Intuitive Surgical, large installed base, generates ongoing high margin instrument sales and service revenue, while providing the clinical case history sought by surgeons and hospital administrators. The system can assist multiple types of surgeries across numerous specialties, allowing hospitals to drive more procedures through the same platform. The diverse uses based on insulates Intuitive Surgical from potential specialized devices. Intuitive Surgical has no direct rivals and a growth base of users who are building their careers on proficiency. They have been doing great on EPS as well. This basically is a company that develops, manufactures, and markets surgical systems and related instruments and accessories for invasive surgeries. So this is a nice play into the healthcare supply sector of the market. And I see great growth from them for 2021 as well. Then here, we got 3 strong buys that pay that great dividend over 9%. Sometimes it's hard to find good companies that pay that much of a dividend where the share doesn't dilute itself. CTO has been having a kind of a rough time here lately over the past few years, but over the past week and the past month, it is it's pretty much turned it around. The dividend yield for this company is only 4.53%, but with the calculated growth of 6 or 7%, that will put you over a 9% dividend yield. EPS hasn't looked so hot, but we're expecting a good Q4. And CTO Realty Growth is a diversified real estate operating company. The company operates through the following business segments. It does income properties, management services, commercial loan investments, and real estate operations. Income property segment consists of primarily of income producing properties, and its business plan is to focus on investing in additional income producing properties. The management services engages in managing Alpine Income Property Trust Inc. The commercial loan investments consist of one loan collateralized by a hotel property in Atlanta, Georgia. The real estate segment consists of revenues generated from the land transactions and leasing and royalty income from its interest in subsurface oil, gas, and material rights. So definitely a nice real estate play here to get you that nice dividend monthly payout. Then we got ticker HEP. This is Holy Energy. This one here, hasn't been doing great over the years as well, but over the past 3 months it has recovered, and it has gotten its fundamentals and balance sheets together, and it does pay a very nice dividend of 11.90. So great dividend. Strong analyst ratings, 75% hold, 25% buy from 8 different analysts. Like I said, they weren't doing too well. Q3 they had great EPS. And this business engages in the operation of a systems of petroleum products and crude pipelines, storage tanks, distribution terminals, loading rack facilities, and refining processing units. So definitely a great play into the energy sector of the market. Then we got DHT. DHT Holdings has been doing, not so hot as well as the other two. But like the other two as well, it's made a bounce back in the last 3 months. The dividend yield for this company is outstanding at 23.56. You got 10 analyst ratings, 60% buy, 30% hold. EPS hasn't really meet the mark. They did recover Q2, Q3. That's why they've been turning it around here the last 3 months. And basically they engage in the operation of a fleet of crude oil tankers. It operates its integrated management companies, out in Norway and a couple other countries. So this is another play into the energy sector. It's going to be a nice bounce back play, paying a nice dividend. Then we have 7 NASDAQ ETFs to play with the index winning momentum. We got ticker SSYS. This is a long-term play for myself. I'm currently up 87.50%. This is a great fund here, and it grows typically, about 6% a year. It's just had a very nice past 3 months, but yeah, about 6% a year. Doesn't pay a dividend, but it is a growth fund. We got 7 analyst ratings at a 71% hold. The company's has printers, materials, distributions, and services. It has natural apparel to many industrial customers. Smaller competitors with strategic products may seek to leverage this infrastructure. The 2014 acquisition of Solid Concepts, Harvest Technologies, and Crab Cab Positions, sets up SYSS as one of the largest direct manufacturers serving, professional markets. The 2012 objected acquisition made Stratus the largest manufacturer of 3D printing equipment, one of the few offering a full line of products and services to the professional market. pretty good EPS quarter 2, quarter 3, and basically they they engage in the provision of applied additive technology solutions for industries including aerospace, automotive, healthcare, consumer products, and education. Its system include desktop 3D printers for idea and design development, various systems for rapid phototyping, and large production systems for direct digital manufacturing. The company also develops, manufactures, and sells materials for use with its systems and provide related services offering to its customers. So a nice play into the industrial and business sector of the market. A great 3D printing play there. Then we got ARCT. This is Therapeutical Holdings. It's going to be a new trade for me. This company has great growth, about 17% a year. 10 analyst ratings, all at 100% buy. EPS was down quarter 3, but we expect a good quarter 4. And they basically engage in the research and development of medical applications for the asset-focused technology. The firm develops RNA therapeutics, which focuses on the treatment of liver and respiratory disease. So a great play here into technology and to medical devices. It's going to be in the pharmaceutical sector of the market. Then we got which isn't really a fun, but we got Apple, which has helped the previous company run up. And of course everybody knows Apple. Apple's a great company. It grows about 80% a year on average. I have Apple long term. I'm up 5.18% in my position. It doesn't pay a nice small dividend yield of 0.62%. Market cap is $2.21 trillion. We got 40 analyst ratings on Apple, 58% hold, 33% buy. Between the greatest smartphones in emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone businesses. Apple's iPhone and iOS operating systems have consistently been rated, at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for the long-term customer retention. I think Apple is going to innovate with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more critically help to retain iPhone users over time. Apple's earnings have been outstanding. And if you don't know, they engage in design, manufacturing, and sales of smartphones, personal computers, tablets, wearables, and accessories, and other variety of related products. It operates, in America, Europe, China, Japan, all over the Asian Pacific, and stuff like that. So definitely a great company here. They have the iPad, Mac, the iPhone, AirPods, Apple TV, Apple Watch, Beats, Apple Care, iCloud, digital content storage. They got streaming, licensing services. So definitely a great play in the hardware and software sector of the market. Apple is a no-brainer. Everybody should hold Apple in their long-term portfolio. I mean, it's just a beast of a company. Then we got Triple Q, also another long-term play for myself. This one I'm up 4.73%. This one grows about 40% a year with a nice little dividend of 0.54. And it's basically an index of the top 100 NASDAQ listed stocks. So your best 100 NASDAQ stocks are going to be in Triple Q. Then we got Triple QM. This is an exchange traded fund. And this one here grows. It's a new IPO. It just started about 3 months ago. So it's up about 7%. So I can't tell you that's going to grow every year 7%, maybe more. I would expect more. They have a small dividend of 0.63, and it's a passively managed market cap index, that tracks the top 100 NASDAQ listed companies, but they use a cap weighted narrow index search, excluding financial companies. So a nice little unique play into the top 100 of the NASDAQ for that fund. Then we got Q Triple J, pretty much the same, pretty much almost the same. This thing started back in October as well. It's already up 20 something percent. Dividend yield of 0.36, and it's a modified market cap weighted narrow index of 100 non-financial stocks that are eligible for inclusion into the NASDAQ 100. So the top 100 non-financial companies that are going to be introduced to the NASDAQ. That's what that fund is going to consist of. Then we got QQEW. This one here is also a first trend NASDAQ 100 equal weighted index as well. This thing's been out for a while, grows about 30% a year, pays a dividend of 0.34%, and it's an equal weighted version of the NASDAQ 100. So it's similar to the NASDAQ 100, but it's going to be equal weighted based off of not only market cap, but they're going to keep everything at the same percentage in that fund, probably around 10% or so. Then we got Fidelity NASDAQ Composite Tracking Fund. This one here grows about 30 something percent a year, 0.70% dividend, and it tracks a market cap weighted of NASDAQ listed companies as well. And this is just one provided to you by Fidelity for their nice little weighted NASDAQ 100. Then we got ProShares Ultra Triple Q. This thing is crazy. It gains about 100% a year. It's very, very good growth. That's because it's a 2 times leverage exposure of the NASDAQ 100. So however the NASDAQ 100 moves, this is going to do twice as good or twice as bad. Of course, tech is been a big hype. So that's why it's up so much and keeps growing so much. Then we got TQQQ, another long-term play of mine, very tech heavy. It's up. I'm up 24.80% in my position, and this thing's up over 1,000% over the past 5 years. So it's growing massively. And what this is a 3-time leverage exposure to the NASDAQ 100. So just like the 2 times, this is a 3 times. So however good it does, it's going to go 3 times higher, which is why it's got massive growth. Then we got CTO. This is Realty Growth. This is a company that I already mentioned that I just added to the watch list. Then I added SSYS back to the watches. Triple QJ, Triple QN as well. I believe Triple QN was not on this list. And then we got Triple QEW. So these are the 4 that I added to my watch list. Most of the others are already on my watch list. So yeah, that would be my 13 stock picks for the day as of right now. If you like this content, please hit the like button, subscribe, hit the bell, follow my journey. I would really appreciate it. Thank you guys for tuning in.